Hello, today I'm gonna talk about the bonds payable when issued at premium. So again, we are using intermediate accounting by Kieso. Okay, so we have this example from the book. Evermaster Corporation issued 100,000 of 8% term bonds on January 1st, 2022. So the 100,000, it's the face value, which is the principal amount, the amount that I'm gonna pay at maturity. So today I'm gonna receive the present value. After a certain period of time, I'm gonna pay the face value, which is the 100,000. 8%, it's the stated rate, which is decided by the bond issuer. الشخص اللي أصدر البونز هو اللي بيحدد النسبة اللي هي 8%. This is the stated rate. Okay. So the issuance date was on January 1, 2022. It's due on January 1, 2027, which is after 5 years. So N here, it's 5. With interest payable each July 1st and January 1st. So here the payment is semi-annually. يعني I'm gonna pay twice a year. بكل سنة رح أدفع مرتين الفوايد. Okay? رح أدفعها بجولاي 1st وبجانيوري 1st. Now investors require an effective interest rate of 6%. Okay. So investors decide based on the market. So the market rate or the yield rate is 6%. Okay? So again, the stated rate, when the stated is greater than the yield or the market, it's going to be issued at premium. يعني the present value, the amount that I'm going to receive today, will be greater than the amount I'm going to pay after 5 years. So the present value رح يكون أعلى من the face value when the stated rate is greater than the market rate. So we say it's issued at premium. Now, how can I compute the present value? The present value, you need to find the present value for all of your cash outflows. أنا عندي two things here. I'm gonna pay the 100,000. I'm gonna pay the 100,000, which is the face value after 5 years. At the maturity date, I'm gonna pay the 100,000 only once. So I'm gonna use the present value single sum table. Okay, present value single sum table. When n, it's the number of periods. So أنا عندي 5 years, but I'm gonna pay twice a year. So n will be not 5, it's gonna be 10, because I'm gonna pay twice a year, semi-annually, مرتين بالسنة. So the number of periods will be not 5, it's gonna be 10, as you can see here. And the rate, when you use the tables, you go to the present value tables, you always look for what? The market rate or the yield rate, which is, or the effective rate, اللي هو كم? 6%. The 6%, it's annual rate. بالسنة 6%. Since the payment will be twice a year, so I need to divide the 6% by 2. So it's going to be, as you can see here, it's going to be 3%. Okay? So you're going to go to the table and you're going to look for the factor, and this is the factor. You're going to multiply to the face value. This is the present value for the 100,000. يعني 100,000 اللي أنا رح أدفعها بعد 5 سنين قيمتها اليوم 74,409. تمام؟ So this is the first thing I'm gonna pay. The second thing I'm gonna pay is the interest payments. Now, the payment, it's face value multiplied by the stated. So the face value, it's 100,000 multiplied by the 4%, so it's gonna be 4,000. I'm gonna pay the 4,000 10 times لأنه and it's 5. The payment, it's semi-annually, so twice a year, مرتين بالسنة, so 5 ضرب 2, it's gonna be 10. So أنا رح أدفع 4,000 10 times. Okay? So I'm not gonna use present value single annuity table as I did with the face value. I'm gonna use annuity table because I'm gonna pay the same amount more than once. رح أدفع 4,000. Okay, the interest payment رح أدفعها 10 times. So we're gonna go to the present value annuity table. when n it's 10 لأنه عندي years 5 والpayment مرتين بالسنة twice a year, so we're gonna multiply 5 by 2, so it's gonna be 10 periods. Okay, and again when you go to the tables, to the present value tables, the rate you're gonna use is the market rate or the effective rate اللي هو 6%. The 6% it's annually. The payment here it's semi-annually, so I need to divide this by 2, so it's gonna be 3%. Now as you can see here, he said ordinary annuity. Now what's the difference between ordinary annuity and annuity due? Okay, so annuity, you're gonna have two tables for annuity, present value annuity. You have something called ordinary annuity, and the second one it's annuity due. What's the difference between the two is? The difference is, now ordinary annuity, it means the payment will be at the end of the period. يعني شوفوا معي هون, the issuance كان January 1, the first payment will be on July 1, يعني after 6 months, so it's at the end of the 6 month, so it's called ordinary annuity. But if he said the issuance date it's on January 1 and the first payment will be in the same day, يعني بنفس اليوم, the first payment رح تكون بنفس اليوم, it means I need to go to the annuity due table. Is it clear? Because it's gonna be paid at the beginning of the period. تمام. So مرة تانية, if the payment, the first payment will be after 6 months or after 1 year, I'm gonna use ordinary annuity. But if the first payment will be in the same day, in the same issuance day, يعني January 1 2022, وأول payment رح تكون بنفس اليوم January 1 2022, هذا معناته I'm gonna go and use annuity due table. Okay, so now I'm gonna go to the present value ordinary annuity. When n it's 10, I is 3%, and we got this factor. I'm gonna multiply it with the 4,000 اللي هي payment. We calculated the payment here. I'm gonna multiply them. I'm gonna get the present value, يعني قيمة 4,000 اللي أنا رح أدفعها 10 مرات, قيمتها اليوم 34,121. Now the present value, the total for these two, which is 108,530. As you can see, it's greater than 100,000. The present value أكبر من the face value. Why? Because the stated rate was greater than the effective rate أو yield أو market rate. Okay, so لما يكون stated أكتر من market, it's going to be issued at premium. يعني the present value will be greater than the face value. And the difference is 8,530. We call it premium on bonds payable. When the present value is greater than the face value, we call it premium on bonds payable. When the present value is lower than or less than the face value, the difference will be called discount on bonds payable. Okay, when the present value equals the face value, it means there is no difference. Okay, to be amortized, يعني لما يكون issued at par قلنا we don't need the amortization table لأنه ما في difference بين present value والface value. بس when it's issued at discount, yes, because the present value will be lower than the face value, so I need to increase it to reach to the face value. But if the present value is greater than the face value, so I need to decrease it to reach to the face value. So I need to do amortization table only when issued at discount or issued at premium. When issued at par, no need for the amortization table because there is no difference between present value and face value to be amortized. Okay, so as you can see here, these are the present value tables. For the principal or the face value, I'm gonna use present value of single sum. When n it's 10, because n it's 5 years, I'm gonna pay twice a year, so I need to multiply it with 2, so n it's 10, I it's 3%. The market rate or the effective rate, it was 6% annually. I need semi-annual, so I'll divide it by 2. Okay, so when it's semi-annual, n should be multiplied by 2, I should be divided by 2. and this is the factor. We're going to multiply it with the 100,000. We got this present value. Now for the payment, the 4,000, I'm going to go to present value ordinary annuity table. When n, again, it's 10, I, the effective rate, which is 3%. The stated rate will be used only to calculate the payment, the 4,000, okay? We're going to multiply 100,000 by 4%, okay? Because the annual rate, the stated annual rate was 8%. I need half of it because it's semi-annual, so 4%. So 4% times 100,000 will give you the payment, which is 4,000. You're going to take the factor. When n it's 10, I is 3. You multiply it with the 4,000, you get the 34, 121. If we add these two, we get the present value. Okay, so this is the amortization table. We're going to have date, cash paid, interest expense, premium amortized, not discount amortized this time, and the carrying amount of bonds payable. So on January 1, 2022, there is nothing to be here, only present value. We just start with the present value, okay? As you can see, it's greater than the face value. So after 10 payments, we're gonna reach to the 100,000. So each time, I need to decrease the 108,530. I need to decrease the carrying amount of bonds payable to reach 200,000 when it's issued at premium. Now, how can we calculate the cash paid? Again, it's face value multiplied by stated. The face value, it's 100,000. The stated rate is 4% because it's semi-annually. 8% divided by 2, it's going to be 4%. As you can see, both will not change. Face value will stay 100,000. The stated will stay at 4%. So the 4,000 will not change. But the interest expense, we need the carrying amount and we need to multiply it with the market rate or effective rate, which is the 6%. But again, here the payment, it's semi-annually. So I need to divide it by 2. So I'm going to take the carrying amount and multiply it with 3% each time. So as you can see, it's going to change. Why? Because the carrying amount will change. Okay? Now the premium amortized, it's the difference between cash paid and interest expense, which is here 744. Okay? Now, shall I add it to the carrying amount to get the new one? Will I subtract it? When it's premium, I need to subtract. Why? And I start with 108, I need to reach 200. So I need to decrease it each time by this difference, okay? Yeah. Let's journalize. Now on January 1, 2022, I started with the bonds. So I issued the bonds. So I'm gonna receive cash today. So my cash will go up on the debit side. I will pay it later. So bonds payable, it's a liability. Liabilities will go up on the credit side by the present value. Now on July 1, 2022, what's gonna happen? I'm gonna pay the first payment, the 4,000. Pay, so cash will go down. Cash will go to the credit side. Interest expenses decrease equity. They will always be in the debit side. Okay? And this is the amount. Now the difference, the premium amortized, again, I'm subtracting, I'm decreasing the carrying amount for the bonds payable. So I want to decrease the bonds payable. It's a liability. If I want to decrease it, it's gonna go to the debit side. So as you can see, bonds payable will be in the debit side because I'm decreasing it. Okay? Now, at the end of the year, I need to adjust my report. So at December 31st, 2022, I need to journalize the adjusting entry for the accrued interest because I did not pay it yet. I'm gonna pay it tomorrow. Okay? So we're gonna debit interest expense for 3,234 because again expenses decrease equity, so they should be in the debit side. Okay, did I pay the 4,000? No, I did not pay the cash. It's gonna be paid tomorrow, so I'm gonna credit interest payable 4,000. What about the 766, the difference between the two? Again, I'm decreasing the carrying amount of bonds payable, so I need to decrease bonds payable. liabilities decrease and the debit side. Okay, now on January 1, 2023, I'm gonna pay the 4,000. So we're gonna take the interest payable, okay, and decrease it. Okay, I'm gonna decrease this liability and I'm gonna pay cash, so cash will go down by the 4,000. Now we're gonna repeat the same entries, but we're gonna change the amounts. At the end, at the maturity date, I need to pay back the bonds payable. So I need to pay the face value. So bonds payable will go to the debit side, cash will go to the credit side with the face value. I'm gonna switch the issuance entry. I'm gonna switch it because again, when you issue bonds you have a liquidity problem. بدي cash. So أنا بصدر سندات اليوم، باخد الكاش اليوم، بعد 5 سنين I'm gonna pay the face value and I'm gonna pay the interest twice a year for the 5 years. Okay, hope that it's clear now. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.